Hey everybody, welcome to this new update from First Macro Capital. We're going to take a look at gold and how it's done during past gold booms. We're going to take a look at not only how high it went, we're going to see how long it went for, because each one has been different. And we're going to take a look at, based on how high those have past went, how high this new gold boom's going to go. Remember to hit subscribe and the bell. Check us out at firstmacrocapital.com, where we take a cycle approach to finding multi-year opportunities. We've just released our new report that highlights a coming event for a select few stocks. We look at new sectors every month that present great fundamentals with wonderful stories and great businesses, multiplied by that sector momentum to maximize the gains. Thanks for joining us today. My name is Paul from First Macro Capital. You know the drill, general disclaimer, there's risk in investing. We're trying to be as accurate as possible. Gold's been in the news recently. Everyone's making wild predictions on gold. Could it go to 2,000, 3,000, 10,000, even 100,000? Whoa, hold on a second. So let's look at the euro dollar versus gold versus the S&P 500. We published this report a couple weeks ago on the euro dollar versus gold and the relationship that it has with the S&P 500. Euro dollar continues to accelerate, which is good for gold, as it basically was a good warning sign for further accelerating the gold price as it did in 2000 and the 2008 cycle. Initially, in both cases, S&P 500 accelerated higher, just as we saw recently over the past couple weeks. But how high can gold really go? We always take our cycle approach. First, we need to know where we are investing to help us understand the cycle. In this case, we're looking at the gold cycle. Then we need to look at how the stock, commodity, or whatever you're investing in has performed in the past cycles. Then we can to really see how much upside we truly have. So in this case, when we look at the past gold booms from 1971 to 74, gold went up about 5 times. And then from 1976 to 1980, it went up just under 10 times. From 1971 to 1980, it went up over 22 times. But the reason we're not really going to take it into this consideration is that there was a recession halfway through. Gold got hammered this time. So really 1971 to 74 and 1976 to 1980 are better metrics for investors, because some of those investors halfway through in the 1970s got wiped out before the gold boom on the second wave accelerated. And then in 1999 to 2001, those of you who are able to enjoy the ride, it went up just under 10 times. Right now, we're only up 37%. So we're still really early in this current gold cycle. Now that we have looked at how gold has performed in past gold cycles, the next question we're always trying to figure out is, how long can it go on for? So from 1971 to 1974, it went up for about 834 days. That's the green line. Then, if we look at the 1976 to 1980 gold, it went up just under 900 days. For those of you who are wondering, from 1971 to 1980, it went up for just 2,100 days. And then in the most recent gold boom, and this was a long one, from 1999 to 2011, it went up for over 3,200 days. But where are we today? So if you look at the red line at the top there on the left-hand side, we've been going on for basically since gold bottom in 2015 at just over 1,048 US dollars. Gold has been going on for just under 1,000 days. So this is now, out of all the 4 cycles, been the second longest gold bull market. And there's so much more upside to go. And it's only really people are really starting to pay attention to it. As you can see, since boom has started, this is the first time it's sort of broken above $1,400. Really important inflection point. Yes, it can bounce around, but it looks like further momentum. So now that we have looked at the past performance of gold, we looked at how long it went on for during those past gold cycles. Now we can look forward to see, how high can gold really go to? Remember when we talked about, was it the 2,000, 5,000, 10,000, even 50 or 100,000 in US dollars? Are those all plausible? Based on what we've looked in the past performance, if we take the 1971 to 1974, gold from the low in 2015 of gold price of just over 1,000, and call it $50, gold has an upside of over $5,000. Now, if we take the 1976 to 1980 multiplier of the gold boom, gold went up just under 10 times. So we're looking at around a $10,000 gold price. Now, if you take that entire gold boom from 1971 to 1980, it went up 22 times. But as we said, there was a bear market during that time. There was a recession during that time. It knocked out a lot of investors. So we think the 1971 to 1974 or 1976 to 1980 are better metrics for gold investors to really use a plausible. Now, could it go up like the 1971 to 1980 over that time? Yeah, of course. Anything's possible. But as investors, we need to be realistic in what we're trying to do and understand what the potential is. And then the 1999 to 2011 gold boom, it went up. Just the potential here is just under $8,000 to $9,000. So we're only at a $1,400 gold price. We are less than 20% of the way through. There's so much more upside now. Is a double possible? Absolutely. Is a triple possible? Absolutely. But this is why we really take a cycle approach to not only sectors, stocks, asset classes, and all commodities. Looking at gold, we're still early in the cycle. Less than 30% if you assume that worst case scenario we talked about from the 1971 to 1974 scenario. But if you assume the best case, we could be only 6% of the way through. So there's lots more to go forward. Fundamentals are really in play as where similarities in 2000 is accelerating. We had the tech bubble that bursted right around that time. Just like today, the tech bubble is bursting and the commodities boom was just starting to accelerate, just like today. But most importantly, the gold price is accelerating since the 2015 low, and it only continues to accelerate. It's really broken out of that long-term support line going back from the high set in 2011. The momentum for gold has been really building. Most importantly, gold price is accelerating going forward. There's a saying that Reverend Run from the famous rap band Run DMC said, "You can hate if you want to, but you'll be with me in time." The momentum for gold has been building since the beginning of the year, and it's only accelerating. So again, you can fight the trend or you can embrace the trend. And the trend continues to accelerate since the beginning of this year. This is why following just the fundamentals can get you in those long-term value traps that many investors were holding on to gold throughout from 2013 to 2016. You need the momentum to be working for you. And if the momentum isn't working and it's breaking down, admit it and get out. But in this case, the gold momentum is continuing to accelerate. With new sectors covered every month where we look to ensure there's great fundamentals, a great story, and wonderful businesses, but the momentum is there to maximize the upside. It's only a monthly subscription of $89 a month, no hidden fees, no hassles, cancel at any time. Again, check us out at firstmacrocapital.com.